Calm Market Roundup for the week of May 18th through May 22nd. This was one of those weeks where the market looked strong on the surface, but underneath, investors were still watching inflation, interest rates, oil, and the Fed very closely. For the week, the S&P 500 finished up about 0.9%, the Dow was up about 2.1%, the Nasdaq gained about 0.5%, and small caps, which are measured by the Russell 2000, were up about 2.7%. So yes, stocks moved higher overall, but the reason I would not describe this as a nothing to worry about week is because bond yields and inflation concerns are still very much a part of the story. The latest CPI report showed inflation running at about 3.8% year over year in April, and core CPI, which excludes food and energy, was about 2.8%. And producer prices, which can sometimes signal pressure building earlier in the pricing chain, rose 1.4% in April and were up about 6% from a year earlier. That matters because if businesses are paying more for goods, transportation, energy, and services, the market starts asking, well, will companies absorb those costs, or will consumers eventually feel more of that pressure? And that's one reason the Fed is still so important right now. The most recent Fed minutes showed the committee kept the federal funds rate target range at 3.5% to 3.75%, and the Fed is still watching incoming data, inflation, employment, and the balance of risks. So the big takeaway is this: the market can rally even while risks are still present. Strong corporate earnings, AI enthusiasm, and resilient consumers may support stocks, but inflation, oil prices, interest rates, and geopolitical uncertainty can still create volatility. For long-term investors, this is why I don't think every weekly move needs to become an emotional decision. A good plan usually has to survive both green weeks and uncomfortable headlines. Looking ahead, next week matters because we're watching fresh data on GDP and the Fed's preferred inflation measure, PCE. That could help shape expectations around interest rates and market direction going into June. So my calm money takeaway is don't ignore the headlines, but don't let 1 week of headlines become your whole investment strategy either. And remember, this is education only, not individualized financial, tax, or investment advice. Always do your own research or work with a licensed professional. I'm Stephanie, helping 1 million people feel calm and confident about money, one steady step at a time.